Hey everyone! So you've probably heard something about the US-China tariff war heating up again in 2025. Tariffs, trade wars, truce talks, it all sounds like something from a high-stakes Netflix political drama. But this is real, and it does affect your wallet. Today we're breaking it all down. What's going on, why it matters, and how it could impact you. If you enjoy videos that make complicated financial stuff a little less boring, hit that like button and subscribe. Okay, so let's start with some historical background to understand the current situation. The US and China are two of the largest economies in the world. They trade a lot. In fact, in 2024 alone, we did close to $600 billion in trade with China. But there's been tension. The US thinks China's been playing unfairly, undervaluing its currency, subsidizing local industries, stealing intellectual property, and flooding the market with cheap exports. So, what does Uncle Sam do? He taxes Chinese imports. And obviously, China isn't thrilled with that. So, they tax American goods in return. Classic playground rules: you throw sand, I throw it back. Now, let's fast forward to this year. In February 2025, the US imposed a 10% universal tariff on all Chinese imports. A month later, that jumped by another 10%, totaling 20%. Then came a massive escalation in April. The US slapped a 34% reciprocal tariff on all Chinese goods, followed by an additional 50%, bringing the total to 125%. And just when you thought it was over, a final 20% fentanyl-related tariff pushed it up to a whopping 145% on Chinese imports. China didn't take this lightly. In February, they hit back with a 15% tariff on American energy products and 10% on tech and machinery. By early April, they responded with a 34% tariff. A few days later, they raised it another 50% to 84%. And on April 11th, they capped it off with another 41%, making a total of 125% tariffs on American goods. It became a full-blown tit-for-tat escalation. In the midst of all this, Walmart warned that prices could spike if things don't cool down. So in May 2025, after a lot of pressure from businesses and economists screaming, "Guys, stop!" the US and China agreed to a 90-day tariff truce. During this truce, the US dropped tariffs from 145% to 30%, and China reduced theirs from 125% to 10%. Basically, everyone took a deep breath and said, "Okay, maybe let's not crash the global economy today." This gave manufacturers a chance to ship goods again. In China, factories that had slowed down suddenly fired back up. Now the big question is, why should you care? Here's why. 1. Tariffs make goods more expensive. That new iPhone that you were planning to get, it could cost $100 more. 2. American manufacturers that rely on Chinese parts struggle. Some can cut costs or, worse, lay off people. 3. Stock markets don't like uncertainty, and trade wars bring a lot of it. Just a day after Trump announced the 145% tariff, the S&P 500 fell 3.5% and the DOW slid 2.5% in a single day. 4. We're already fighting inflation, and adding tariffs on top can pour gasoline on the fire. So what happens after the 90 days? Well, that's the billion-dollar question. China's state-supported Global Times stated recently that the 90-day pause on tariffs is too short and should be extended further. But there are still major disagreements between the two countries. The US wants China to stop subsidizing its industries and open up its markets, whereas China wants the US to back off and stop using tariffs as a political weapon. If no deal is made, tariffs could go right back up. And if that happens, we all need to be prepared. Now you might be thinking, what can we do about all this? Here are a few actionable steps you might find useful. Buy smart. Stock up on non-perishables or key items that may become pricier due to tariffs, especially electronics and household goods. Support local. Shop from local businesses and brands that manufacture domestically. This not only avoids tariff markups, but also supports the local economy. Diversify your investments. If you're investing, consider global diversification. Tariff news causes volatility, and spreading your money across different sectors or countries can help manage risk. If you're in e-commerce or retail, explore sourcing from other countries like Vietnam, Mexico, or even within North America. Start conversations with new suppliers now, rather than when things get urgent. Let's be real. This isn't just about economics and finance. It's about power, tech dominance, and global influence. China wants to lead in AI, semiconductors, and electric vehicles, and the US wants to maintain its initial lead. So the trade war is just one battlefield in a much bigger geopolitical chess game. I hope you found this video helpful. If you did, please drop a like. And for more content like this, where we break down money, markets, and all the madness, consider subscribing. Thanks for watching, and I'll see you in the next one.